The crypto market has been shook to its core with the recent bankruptcy of FTX and now the pause in withdrawals from one of the most well-renowned crypto firms called BlockFi. And it's pretty safe to say this is shaking a lot of investors out of their crypto investments, not only directly, but also indirectly through stocks like Coinbase. And it is only instilling more fear in all the investors who stayed on the sidelines with crypto about whether or not this technology is actually going to have a big future within the next decade, as many analysts and investors like Goldman Sachs and JP Morgan have predicted. Well, in this video, I'm going to share a contrarian perspective by explaining why the FTX bankruptcy was the most important catalyst for the crypto market in 2022, because it could signal a potential shift in regulation and a potential near-term bottom in Bitcoin. But before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, let's try to get an understanding of how the situation from various crypto brokers has developed over the past few days. After FTX filed for Chapter 11 bankruptcy not only in the US but also globally, we heard a string of conversations around Crypto.com and BlockFi about potentially their own balance sheets having major holes in them, resulting in potential future withdrawal restrictions. And this is obviously very bad news if you're a holder of cryptocurrencies in anything other than a cold storage wallet. Big investors like Kevin O'Leary did indeed learn this the hard way by trusting offshore brokers like FTX to provide them the safety and the security to lead the crypto charge. And clearly that was not the right call, because like I've already explained, offshore brokers have significantly more deregulation and extra risk added on top. And this is precisely why something like Coinbase stock is not down another 30 to 40% after the bankruptcy news of FTX. As a matter of fact, at the time of filming this video, the stock is actually up over 12% since the FTX bankruptcy announcement. And this exactly goes to show you the inverse mentality that the stock market employs, and something that crypto investors are simply not realizing yet. Which is obviously the fact that when you have something break in the entire system, chances are you're very near to the capitulation phase that many investors have been talking about in this crypto bear market. When something so catastrophic has happened where some of the most bullish crypto investors also start reconsidering their long-term thesis, that's when you know that we could be ending that area of high selling. Because when this kind of event happens, all the weak hands get shaken out, and even the institutional investors like obviously Kevin O'Leary, who thought they got the investment right, realize that this sector might just not be for them. And it's that which creates the opportunity for long-term investors who are thinking outside the box. And I know many people will obviously call me crazy, but I see this as a good reason to continue investing in Coinbase stock and believing in the long-term future of crypto. Because when you have such a big realization in markets where there's no single company that is too big to fail, that's when you realize that regulation and transparency is key for the success of crypto. And now sure, although Coinbase is not immune to going bankrupt or something bad happening within the next couple of years, out of all the brokers that exist out there in the crypto markets, Coinbase is unarguably the most regulated and most trustworthy one. Coinbase is not only a founder-led business, but they've also been through 5 previous crypto bear cycles, and they have survived through every single one of them with worse financial positions than they have today. Binance was founded in 2017, and FTX only came on the block around in 2019. And as a result, their high growth turned out to be extremely unsustainable, as we obviously saw SBF gain one of the biggest wealth increases ever for a 30-year-old. So what could be next after this FTX collapse for somebody like Coinbase, its investors, and its holders? Well, let's listen to Coinbase's own CEO explain her take on this situation with BlockFi, FTX, and now Crypto.com.
I'm curious from your perspective, watching what's happened to FTX, in some ways being somewhat involved in the sense that there have been some inflows into Coinbase in the last couple of days, and your CEO, Brian Armstrong, has told us that he has taken a look at the assets and has passed on them. What is there to be learned from all this? What changes about crypto on the wake of this?
Thanks for having me. And it's such an important question, and one that we need to all as an industry step back and say, how do we learn and where do we go from here? And for us, where this means is it's so critical that we have clear regulations in the US so we can drive volumes to the onshore providers, so we can offer customers the transparency and the disclosures that they deserve, and that everyone understands the risks that they are taking by participating in the crypto economy. So we continue advocating for clear policy in the US, and I think that is where we need to go. Thoughtful regulation.
Beyond regulation, how do customers, when they work with an exchange, know that if something were to happen, that they would get their money back? I know on your website you say that you're not FDIC insured, but you do have insurance. Do more companies need to be getting more insurance? Do they need to be seeking help from other backers to know that they can make customers whole in this type of event?
It's such an important question, and I think it depends on the business model. So at Coinbase, we're different. And as we clearly disclose, we are holding customer assets one for one. We're not rehypothecating them. So there can't be a run on the bank at Coinbase. I do think when you have platforms that are rehypothecating assets, that's when you need to really understand the risk. You need to understand, what is that equity capital that's being there? Is there a safety net beyond equity capital? What happens if the company mismanages the assets that are protecting these liabilities? But at Coinbase, that's not what we're doing. So that doesn't impact us, and our customers are safe on our platform because we do hold their assets one for one. We don't rehypothecate the balances. We don't do anything without the client specifically directing us to take action, and we think that differentiates us across the space.
And transparency with regards to the disclosure of those reserves and disclosures of those rules. I am curious, though, you can be sort of the good actor in this space, but if everyone around you, or at least a significant number of people around you, are bad actors, you have to be a little bit concerned as to whether that rubs off on you fairly or not.
Well, there's going to be an indirect impact of this, meaning a lot of customers are sadly losing money, and this is not a day that we hoped for at all. And so we need to figure out how we rebuild trust. We need to continue to fight for the regulatory clarity, the transparency, and the utility in crypto. And we believe with all of that, we will build back from this. And we're going to see definite lower volumes, I would say, because people are going to hold back at this moment in time. We're seeing them high today, but I think that is going to be, as we work through this volatility, we're going to see players step back from the space and say, was I really here? So we need to re-earn those customers' trust. We need to build products that they can have confidence in, and we need to build an environment where we keep this innovation here in the US and we don't push them to bad or risky platforms.
On that note, CZ over at Binance tweeted out an important comment saying that FTX going down is not good for anyone in the industry. This isn't a win. Global confidence is shaken. Regulators will now scrutinize exchanges even more. Licenses around the globe will be harder to get, and people are going to be coming and attacking us. How do you rebuild confidence? How do you make sure that regulators speak with you, I guess, in an appropriate way, appropriate regulation, responsible regulation, and that you can get licenses and that they're not harder to get?
So I think that licenses are hard to get, and I think that you have to have amazing controls. You have to really be thoughtful about building your business to be compliant, and that's what we've done from day one. We are licensed around the world. We're licensed here in the US, we're licensed by the CFTC, we're licensed by the SEC with some dormant broker-dealer licenses. We have a New York BIT license. We have money transmission licenses in the UK and around the globe. So I don't think that they're going to be harder to get. I think they're going to be important to get, and I think that players that do not have the right compliance programs or controls are going to have a hard time getting those, but that is not who we are. We have always strived to be the compliant, trusted platform in this space, and I think that's a competitive advantage for us now as people understand the risks that they may take by working with players that are not regulated. Now, I think we need to enhance regulation in the US. I think we need to continue to strive, which is why we've petitioned the SEC for more clarity around the broad crypto landscape, but we're having really productive conversations there, and I'm hopeful that we will bring that clarity in the US in the coming quarters.
And that right there sums up the risks of offshore brokers very well. US regulation is actually a good thing for not only the broader crypto markets, but also onshore companies like Coinbase. Coinbase also happens to be the only publicly listed crypto exchange, meaning not only do they get most of the criticism, but they also get most of the praise because their whole balance sheet and income statement is available to view by anybody. Yes, absolutely. In the short term, their revenue is going to get hammered, But this has also been the case for every other crypto broker. The only difference is that FTX or Binance have not had to release their revenue statements through a public exchange like Coinbase. And because Binance and FTX's US branches are so small compared to their global branches, they have little to no attention to social media, and outlets like CNBC simply don't cover their management. And as a result, the risk of Coinbase going bankrupt within the next few quarters at least is not that high, because right now their current ratio is sitting at around 1.06, which means they have pretty much all the assets they need to cover all their current liabilities that are due within the next 12 months. And yeah, because of Coinbase's slowing growth because of the overall crypto bear market, their price to sales and PE ratios have collapsed. But if you're obviously a long-term believer in the future of cryptocurrencies, NFTs, and Web 3.0, then this is probably one of the best buying opportunities you will ever see in the crypto market. And no, that does not mean that Coinbase stock has bottomed or that there cannot be more pain in the crypto bear market. It just means that right now you're getting a great risk to reward investment given how much fear has already been priced into the crypto market. Because if in the long term crypto can get to anywhere the near scale there was at the end of 2021, given its insane momentum over the past 12 months, then Coinbase stock can easily be worth north of $300. Especially if they've made it through this bear market and have had half their competition wiped out. And with the insane partnerships that Coinbase has announced with Google and BlackRock, the investment thesis for the bull side has definitely strengthened a lot. And let's be honest, all the other stuff around Coinbase which seems bad right now, which is slowing growth and slowing sales, is all due to something that is completely out of Coinbase's control, which is the macroeconomics, interest rates, and the crypto cycle. But obviously guys, that is just my take on the situation and I can obviously be wrong. So let me know your thoughts down in the comment section below.